Hello and welcome to this quick tutorial on using Person's pivots. First off, what we have, and I will get to the drawing function here and go with the arrow pointer. The Person's pivots, as you will notice here, targets if the market is in a bullish condition based on past and prior price action. It gives a targeted higher red than the preceding period, a higher green from the preceding period. The market is deemed to be in a bullish mode. Typically, it'll stay north or above the blue line, which is the pivot point of typical price. Obviously, markets may dip below the prior days or the next day's support target, but gives a general direction that the market, if it's truly bullish, should stay within that range or higher. When the market, at the end of the day, it projects what the next day's market condition is. If the market is deemed to be bullish, it generally tends to give a higher high and a higher low, as indicated with the green as support and red as resistance. So what we use this for is a tool to say, is the market condition bullish or bearish? This is the E-mini S&P. This was the 18th of September of 2024, the day the Federal Reserve historically cut a half-point rate cut in the market. As you will see, the market still, regardless of what the event is, targeted a neutral bullish day. Neutral because the market was still giving a higher pivot, a higher resistance, but a lower green. The market stopped almost perfectly at the pivot point. The next day, it was structuring a wider range, bullish to neutral, because it was targeting another higher resistance and a lower support. But as long as the market targets and stays north of the pivot, which is the blue line, in a bullish day, the market is deemed to be acceptance of that market condition. Now, we also give an example besides the E-minis. We could take a look at the SPY, which most traders may be wanting to look at the SPY under the end of day options. And so looking at the S&P, the SPY for single day options, using perhaps a higher time frame, you'll see almost targeting every single time frame. If the market is bullish, it gives a higher high and a higher low. When the market turns, you'll notice that the indicator turns at the end of the next day, targeting that now under a bearish condition, the market, the pivot will act as a resistance, and it targets a lower high and a lower low until we get into a new change of trend direction with a higher high, which is resistance, and a higher green the preceding day. So if we take a look at this study here and we change the time period of the market and go to a 60-minute chart, or change this for an intraday on a 15-minute basis, you will see how the market behaves on a bullish day, targeting on, again, the 16th, the resistance, or the red line, is targeting a higher high than the 15th and a higher green. So you can look at this as an end-of-day trade or an option trade for single-day options for traders to say, if this is bullish, it shouldn't break support. And if it's truly bullish, it'll trade north of the pivot and structure an option trade around that. This is a very dynamic tool, very powerful tool. It's what we call one of the best leading price indicators, because it's telling you in advance, in other words, based on the prior day's close, what the next day's market condition would be. So looking at this particular day on September 24th or 24th, this is a very important day, because this was the day where the actual central bank, People's Bank of China, was actually adding stimulus to their economies, projecting a half-point rate cut there, as well as initiating a program with government-backed mortgage lending. And so it kind of helped our U.S. equity markets, but notice that it targeted a bullish neutral day. The green support was higher than the preceding day. The market held. And again, the theory and the thought process is, if the market's truly bullish, the market will hold above the pivot point. So the Person's pivot doesn't give you all pivots, support and resistance. It gives you the filtered support and resistance based on what the condition of the market is. When we take a look at Bitcoin or cryptocurrency, BTC, using the CME Group's futures, you'll notice the same kind of condition. If the market's truly bullish, day traders can use this for cryptocurrency to say, maybe perhaps if the market's truly bullish, it was giving a targeted higher red, higher green, look to buy support, look to buy when the market gets back above pivot. And as it holds support, it gives you the idea that you can trade within that range of the targeted support and resistance. Now, we will go back and look at this, give you a little bit more look-see, and see how the market trades according to the support and resistance predicted from the prior day session for the next day. So these lines are not drawn in after the fact, they're drawn in the night before the market based on the preceding day's price action. So that's why this is considered one of the most strongest leading price indicators. And these are just the daily for day and swing traders. We also incorporate daily, weekly, monthly, and quarterly, the financial quarter pivots in our other packages. Thank you for listening. I hope this gave you a good explanation of how to use this tool successfully.